Hello, everyone, and welcome to another eToro Hangout. First of all, before I begin, I want to wish everybody a Happy New Year. I hope you had a lovely holiday season. Today, I'm joined once again by my colleague Yana. How you doing today, Yana?
Hi everybody, Happy New Year Nimi as well.
Thank you.
Everything is great. Thank you for asking. What's
Great.
up with you? All good?
Everything is good. Can't complain. And also joining by the man of the show, Mandeep. How you doing, Mandeep?
I'm fine, thank you guys. How are you?
We're doing well. Happy New Year to you and your family.
Happy
Happy
New
New
Year to
Year.
you all as well.
Thank you.
All right, guys, before we begin, I just want to update you for those who may be watching us for the first time. Very exciting day. Lesson 2 of Trading Made Easy with Mandeep Athwal. Mandeep, real quick before we get started, because this was quite a fresh thing that happened. Can you give me a brief opinion of what happened, with the fiscal cliff there?
Yeah, I mean, it was a holiday period, so I wasn't really interested in the markets, but I can give you my view is that it's one of those, like we talked about. Do you remember when we talked about international events?
Correct.
Last week, yeah. So this was a perfect example of an international events. As you can see, the markets actually reacted to an international event. So this was a national event in America, but because America is obviously, related to majority of the world, you can see how the markets quickly reacted to it. Now, what happened in this whole event? I don't even want to name the event because to me, the name of the event or what happened in the event is irrelevant. To me, is how the market reacted to it. So whether it was a good thing or a bad thing, I'll let them decide. For me, all I care about is what the market did, and that's how you should be looking.
Do you happen, just we'll wrap it up with this before we begin, do you happen to think it was a coincidence that the decision was made when the markets were closed?
Guys, how many times do we see this happen is that, for example, you have the major, news coming out and you think like, all these big boys from the world is going to get together and they're going to decide something, or people from America, people from UK, they're going to get something and they're going to make a decision. For example, I'm going to give you a perfect example that happened to me. Northern Rock, do you remember a bank called Northern Rock in the United Kingdom?
Vaguely, to be honest.
It might be before your trading career actually started. Now, I used to trade equities then. Northern Rock was supposed to go into liquidation. We traded Northern Rock all week and it didn't go into any liquidation or even sign of it. Comes Friday, 4:30, the market closes, right?
Right.
That weekend, Northern Rock went bankrupt.
Oh my goodness.
Monday, all our equity is gone. Why? Because that's the way government wants to play the game. However, we can't control that, and that's how it's always going to be. All these big events, they know the market's going to react to it. I don't know why they always seem to hold it when the market's closed.
I have a question.
Okay, go ahead.
I have $1 million in my account. Can I move the market with $1 million?
No. No. It depends. If you're talking about Forex market, no. If you're talking about equities market, you might be able to on the penny shares, but that's about it.
Thank you. Thank you, Mandeep.
Okay.
Well, guys, thank you for that, Mandeep. But now let's get into the fun stuff. So without further ado, I want to give you the floor. Take it away.
Okay, guys, let me just share my screen. Right, here we go. Nimi, can you see my screen?
Yes, we can.
Okay, let's just go to start. Okay, Trading Made Easy with Mandeep Atwal or Mani Atwal. As Iona was calling me Manny last week, you guys might have been confused who is she referring to, but she was referring to myself.
Hi, Mandeep.
Okay, Iona, you can call me Manny or Mandeep, I don't mind. Okay, right, let's get into this. Okay, disclaimer guys, take a couple of seconds to read through this. As always, I don't want any claims put against myself or eToro because we are here for educational purposes only, so that is all we are trying to do here. Okay, last week we discussed what are Forex markets and how they operate. We also discussed the players on the market. So if you recall your memory, I talked about the interbank, and then we talked about the banks, hedge funds, companies who were the traders on the interbank, and then we moved on to how to be a successful trader, in which we discussed novice and professional traders, what are the differences, how you can move from being a novice into a professional, or how you can make your professional career even better. Then we talked about reasons for trading Forex, so it was the pros and cons, if you remember. And then we talked a bit about the charts, but from my memory, I recall is that we didn't have enough time to finish off, so we are going to discuss charts today. For our viewers today, I just want to let you know, if you did miss the first lesson, I am sure my friend Nimi will tell you how you can access lesson 1. Nimi, do you want to just tell our viewers how they can catch lesson 1 if they did miss it?
Yes, of course. First of all, each one of you that has an account manager will and can send you, upon your request, the actual link. Otherwise, eToro does have a YouTube page that is dedicated just to our Hangouts. So what I will do, I will actually put the YouTube link on the open book as well as on my wall. Yana can do the same, and we'll all send it out to our clients so they will be able to register and view this on a regular basis.
Perfect. And they can also search on YouTube, can't they? They can search for eToro and with my name, and it usually comes up. I've tried it myself. It's there.
Or eToro Hangout as well. They come up as well.
Oh, okay. Even easier then. Just type in eToro Hangout, and I'm sure you'll be able to catch it there. Okay, guys, let's move forward. So today is lesson 2, Forex charts. Today we are going to discuss history of Forex charts. So we are going to talk a bit about where they came from and why do we need them, how to read them, and also we will go into a bit of learning the basic knowledge about why and how the charts move. I will talk about the chart itself. So for example, I will teach you exactly what to look out for on the charts. And so I will bring in Iona to tell you how to add indicators or lines, etc. onto your charts. And then finally, we will finish off, if we do have enough time, with supply and demand on charts, or support and resistance, if you want to call it that. Okay, so the history of candlestick charts. Well, they were created over 200 years back by the Japanese, who used to use them for the purpose of doing analysis of their rice markets. The reason they used to use candlestick charts was because rice was their main market of that country. What they did was they would draw lines on a piece of paper where the price opened up of the rice and where it closed, and then they will color it different colors. Now, in those days, they used black and white colors. Today, we use green and red, but however, you can use any color you want. Now, one of the ways and the reasons they used candlestick charting for rice markets was because they wanted to find out where the price had been previously. So, for example, if the rice price went to a certain rice, the price of rice rose to a certain price, they knew that that was the limit, and they would then try and bring the price back down, or vice versa. If the price was rock bottom, they want to take the price back up. Now, one of the reasons we use candlestick charts is because they are visually more attractive than standard bar charts. Now, standard bar charts are obviously available to yourselves through your broker as well. And also we use line charts, which are available as well. But nowadays, especially for Forex, people prefer candlestick charts, and they make the markets look a lot more clearer to read and also understand. Let's move forward. So this is a chart of a Forex currency pair. You will notice this is USD versus JPY, which is Japanese yen. So it's United States dollar and Japanese yen. We have on the chart the time frame. This is a daily chart, so you will see it says daily there. Now you can have different time frames from, all the way from a tick chart to monthly, yearly, whatever you want, depending on your broker and what they offer. And also you can go back into history. Now all brokers offer different time scales. Some let you go back 5 years, some will let you go back 50 years. That all depends on the broker. So this is a typical chart. We have the time frame on the top. These are called candlesticks, the red and blue, or they could be red and green, or some people like to have green. At the bottom, we have something called the indicator. Now, indicator is something that is not on the chart primarily, so you do have to add it yourself. On the right-hand side, we have the price of the currency. So you can see that at the moment, price is around here. And if you look at the bottom, this is the period of time where it says July, April, October, etc., etc. Now, Iona, do you want to just show our clients how they can change the time frame on eToro's platform, and also how they can add an indicator?
Absolutely. How well you can hear me? You can hear me properly, right?
Yeah.
Yes.
Very good. Very good. I'll just allow me to share my screen with you for a few seconds. Okay. Here we are. Everybody knows how our charts actually look like, and where do they have to access the charts. Basically, I'm having the next to the chart type, I'm having time scale. This means that I can choose the time frame that I want. Some clients are they are scalping, so they are looking on a 5, 10, top 15 minutes, but also 60 minutes and up will give you a general overview of how the market was actually moving. So that's where this is the tab where we actually change the time scale from, called time scale. And for the ones which are using indicators, technical analysis, we will have next to time scale studies. We'll have, for example, moving average, or my favorite, relative strength index, which we have it double sized here. We can have it only one time if you want. Here it is.
Perfect.
Okay. Thank you, guys. Thank you very much.
Okay, guys.
Mandy, before we move forward, something interesting. I know today's session we're not going to focus so much on how to apply indicators, but one thing I wanted to touch up on and get your opinion about, because I know you have a lot of experience. I find that a lot of new traders, when they are first using their charts and indicators, load many indicators on their chart. I mean, 5, 6, 7, 8, where you can't even see anything. What's your opinion about that?
My opinion, they look good when your friends come around. That's my opinion. Other than that, they don't do you any good. Okay, guys, let's get serious about this. It's a really valid question what Nimi asked about indicators. Indicators can be very helpful to your trading. However, you have to remember rule number 1: indicators are derived from price. Price is your original indicator. In order for an indicator to move, the price must move first. So the reason what I want you to learn is how to read price. Then you will automatically know how to read an indicator. Indicator should always be a secondary tool. So rather than adding 10 indicators to your screen, you should be adding one indicator, which is price. Then you should add another indicator, which can be any one of your choice. The least indicators you have on your screen, the better. I trade with no indicators. I trade price action on its own, because to me is when price moves, that is my indicator. I don't need anything else, because everything else is a lagging indicator. However, when you are starting out in Forex, you don't know how to read trends, so you can use moving averages to see which way the trend is going. If you don't know how to read volatility, you can use indicators to see when the market is volatile, when the market is less volatile. But last thing you want to be doing is adding about 10 indicators on there, because which one do you look at? You don't know which one's working. And also the problem people face is that when you have more than 2 indicators on the screen, one might be giving you a signal to sell, one might be giving you a signal to buy. So which one do you take? Nimi, does that answer the question?
Yes, absolutely, and I
Okay.
thank you for taking the time. I think it's very crucial for those who are beginning to start off the proper way. And I think a lot of them just get a little bit excited and they see all these indicators and they think, wow, you know, I'm a professional trader now. But just wanted to get an aspect from someone who's been doing this for so many years to give them their opinion.
Yeah, and the other thing is, what I always say to my students is that you don't want to be jack of all and master of none. You want to have an indicator which you can master. And you only need one indicator, and you got your price action anyway to take. I mean, I trade with price action, and if I need to, I will add just one moving average. And I don't even do that anymore. And I make money from trading, so I'm sure everyone else can as well. But if you're starting out, yeah, do add an indicator, but keep it to 1 or 2 max. Don't add any more than that.
Fantastic. Thank you so much, Mandy.
Okay, no problem. Okay, can you see my screen again?
Yes.
Okay, so as Iona just explained everything, how to get the time frame changed on your chart to add in an indicator. Now we can move forward. Okay. So this is the candle on the chart, which is now been enlarged. Now I used a green and a red candle. The green candle usually people say is a bullish candle and the red candle is bearish candle. However, if you looked at my chart was a blue candle was bullish and red candle was bearish. The reason I use blue candles because I'm fed up with looking at green candles. So guys, the point is you can use any color, it doesn't make a difference. What you need to look at is how to read a candle. Okay, so what happens, we have the price opening at the bottom here. And if the price rises, we will get the candle going up that way. The price could go up to there. In this case, in this candle, the price went up to here. The price couldn't hold there and then it came back and it closed here. Now you might be wondering, well, how does price open and close? Well, simple. Imagine this is 1 day's trading. So this is a daily candle. When the market opens in the morning, or wherever you are in the world, it might be in the evening in your case, the market will open here. The price might trade down to here first, and then the market starts rising up. So the market goes up, rises up to there. Now it's end of the day, but the market's come down to here. The day is now finished. I'm talking about a trading day here. So the day is now finished and the market closes. So this candle, because the price rose from there to there, this candle will be a bullish candle. It will fill in the color of green, blue, whatever you are, or even black. It will color from here to there and it will be filled that way. What you need to remember is you need to look at where the price opened from and where the price closed. If you are starting out in Forex, I would recommend that you use green and red candles because they are more, I would say, they're more used by brokers and also teachers in a way to teach you so that you don't get confused between different colors. So for your sake, I would say stick to your charts with green and red candles. Now green you can use as a bullish candle, red you can use as a bearish candle. So we're moving on to bearish candle. So bearish candles is when the market's gone down from where it opened up. Bullish was where the market went up from where it opened. So here, as you can see, this candle closed here. Say for example, this was Monday. Now we have Tuesday's candle. It opens here. So you can see the price move opens exactly the same price at the same level. Now, in this case, the price does open at same. However, we can have, for example, it usually happens over the weekend where the price has a gap. So the price could open up higher than it closed, or it can open up a lower where it closed. We will talk about gaps later in the course, but for now, let's learn about the candles. Okay, so the price opened here and the market went up. However, the market couldn't hold there, so the price started dropping. Price went down, down, down. It went all the way down here, but then the market decided it was going to go up. So it went up, and now it was coming to end of the day, and the market closed here. And then you can see that because the closing price was lower than the opening price, this candle was colored red, and the market moved down. Iona, Nimi, does that make sense?
Yes, yes, it does. So just so I get it right, if I'm a beginner and I'm just starting out, and if I'm buying on this daily candle, I definitely am looking for a bullish candle, which is the green one.
That's
and
correct,
if I am selling, then I'm hoping or I'm looking for the bearish candle, which is the red one here.
That's correct, yeah.
Okay, great.
Okay.
I have a question, if that's okay with you.
Okay, go ahead.
On a daily chart, I'm looking to, as a beginner, I want to know the time when a day closes, which will be 24 GMT, correct? In the evening.
Okay, I will teach you guys about the timings of the market. Every broker seems to have a different time of closure. Now, you want to have a time that suits the market. Now, I use Eastern time, Eastern close, so which is usually, I think it's 5 p.m. Now, Nimi, do you know what time you use for your market close?
We work with GMT time, and if I'm not mistaken, I remember last time Iana took this question, so I don't know if you want to take it again or have me step in. But basically, on Friday evening, we close at 9 GMT time, and Sunday evening open at 22:05 GMT. We have that 5 extra minutes. So as Mandeep just mentioned, you have to really know what's the broker times and obviously what part of the world you're at. So
my question was different. We are talking about daily charts, so I would like to know when the candlestick closes its price on a daily basis.
Now, with regard to the candle closing for an opening on the daily, you can actually set the time with your broker. So I don't want to be advising anyone of what time they should be setting at the moment, because I am going to teach you that later in the course. I get your question is, for example, say this candle, you want to know what time it closed and what time it opened and what time it closed. Am I right?
Correct.
Okay, yeah. That you can set with your broker. You can, and I will show you how you can do that with eToro and with other brokers. Okay, Okay, no problem. Let's move forward. So we have bearish and bullish markets. This is bullish market. The meaning of bullish market is simple, that the market went up from where it started. As you can see, we have long green candles showing strength of the buyers, and the market moved up from there to there. We have bearish market, which means the market was sold by the sellers. So the market came from there to there. You can see this is majority red candles control. Now, we do have sideways market, which we call consolidation. Like, for example, here, we had sideways market, which was for only a small period of time, but you can see the market wasn't bullish or bearish. Instead, the market was going up, down, up, down, up, down. And as far as I understand it, at the moment, we are having that pattern in euro dollar. Now, for starters, people who are just starting out in Forex, what you want to be looking for is this: bullish market, bearish markets. Because when the market is bullish, if you remember my point from lesson 1, you can't control the market. So what you want to be doing is be with the market. If the market's going up, you want to be buying. If the market's going down, you want to be selling. It sounds very easy, but if we all knew how to do that, we will be multimillionaires. Now, one of the things you want to be looking for is this: extended range candles. What that means is this is showing bullish pressure, so that the buyers are in control. If you see candles like this, red candle extended range, that shows there is selling pressure. Usually, if people see this, they will enter the market here, which is too late anyway, because you can see the market starts moving back up. Now, that takes me to my next point, which is supply and demand in action. Supply and demand is the reason why markets move originally. People say markets move because of news. I hear people trading news. I see people trading data. I see people trading all kinds of things, indicators, etc., etc. Now, we spoke about this a couple of minutes back about supply and demand and why people's views and opinions about the news as like fiscal cliff, etc., comes into consideration. Now, I want you to take this quite seriously. This is demand. This is supply. This is resistance. This is support. Prices will fall from there. Prices will rise from here. Simple as. There is no two ways about it. So many times you will see you have great news come out. However, if you had news, this price moves up into supply, you will see it just falls away, regardless of what the news action was. Same with demand. You might have bad news, prices move into demand, but they will rise back. You can call it sport, you can call it resistance, I don't mind. But what I want you to take into consideration is what important role they play. Now, why is supply and demand important? Well, you can see this is a chart which is from this year, 2013. We had supply at the top. Every time the price went into supply, what happened? It fell away, fell away, fell away. We had demand at the bottom. What happened? Price came into a rose, came into a rose, came into a went up. Now the price is there. I'm not saying the price is going to go back up there, but you can already see what the price is doing. It didn't just, you can see how price fell from here. However, as soon as it moved into demand, it formed a green candle and it started going the opposite direction. Now, when I said earlier in this chart that when the prices move up or move down, for example, I gave example of this candle here. I said when the prices move down, people start entering here and they're already too late to the party. What I meant is here, for example, people see this candle, right? And they move into this area. So what they're looking at is this. They're thinking this market is selling. I want to be a seller. But what they forget is it's in demand. It's in support. Price will rise from here. This is the main reason people's trading fails, because they don't know how to read support and resistance. They don't know how to read supply and demand. Guys, like I keep saying, anything in life, when there is too much supply, prices will fall. Prices will fall. Prices will fall. When there is too much demand, prices will rise. Prices will rise. Prices will rise. Prices will rise. Now, when you see this candle coming down like this, you don't want to be entering a short here. You are already in demand. You are already in support. You want to be entering here. So it's simple. What you need to do is look for history, like the Japanese used to in the rice markets. Imagine this is, it doesn't matter what chart it is, we can call it the rice chart. So what would happen is that the price came here and it fell. So the next time the price came in there, what you want to be doing is selling. So you could have had set your order here and the price would have fallen. You would have got out where there is demand. Now in this case, demand probably would have been here, here. So you could have taken your first target here and then your second target here. On vice versa, if you want to be a buyer and you see this market going up like this, what you want to be doing is look where demand was last time. So when the market comes back into it again here, you buy it and look what happens. Market moves back up. And where do you want to get out? You want to set your profit target at opposite supply area, so opposite direction. So where there's supply, prices won't break through that, so you need to get out of it. Now, the reason people get caught out in support and resistance is that, or supply and demand is, say for example, this market does this, and then someone says to me, well, the market just broke through it. Well, the market broke through this level, so this area is now violated. So what you need to look for is another area of support and resistance, or supply and demand. Guys, just look at this. This is a 4-hour chart. Now, this is a euro-dollar chart. And this is not like, you know, going back 10 years or anything. This chart is actually from December. And imagine how many times and how many pips you could have got out of this. Say you're seeing this at the top, right? Prices fell from there, right? So if you set your sell order here and you say to yourself, okay, I'm going to put my stop loss there and I'm going to enter just where the price opened, right? So the price opened and closed there. So even if you had put your order here and you put your sell order here, price would have come into it and look, it would have sold off and you would have picked up nearly what? Nearly 200 pips or something like that. And on the other direction, the price rose from here. So what you could have done is set your buy order here. Once the price moves into there, and look what happens, price just moves back up into supply again. And you could have sold it again, and then it would have moved down again, and then you could have bought it again and sold it again. You could do this day in, day out. What you need to take into account is your profit, risk to reward, and your risk. So you would need to work out 3-to-1 risk to reward. So if, say, for example, we enter the market here, we need to see, can this market move down and give me a profit potential of 3-to-1? Of course it can. Look at it. This is about 4 or 5-to-1 here. Same here. It could move up and give me 4 to 5-to-1. Now, the last thing you want to be doing is risking, say, for example, $500 to make $100. Now, in trading, that wouldn't make sense at all, because say, for example, this market does break out the other way and you lose. If you was working at 3-to-1 or more, you would come out as a winner, because you could lose 2 times and still be in profit. But if you was doing, say, risking 500 to make 100, if you lose 1 trade, you will need to make up another 5 trades to make that money back. So we are going to go into risk management and also stop losses, etc. in our next lesson. But for now, just final touches on this. Remember, this is supply, this is demand. Prices will fall from supply, prices will rise from demand. This is a 4-hour chart. You can get a 1-hour chart up, you can get a daily chart up, weekly chart up. I can guarantee you, any time frame you look at, 5-minute to all the way to a monthly chart, wherever there's supply, prices will fall. Wherever there's demand, prices will rise. That is your lesson 1.
So Mandeep, if I may just ask something here, just so I understand. So pretty much what makes the price of the currency change is whether there's more or less demand for it. So, for example, if there's more demand, as you mentioned, for the currency, then you will experience higher prices. To where if there's less demand, then the currency price will probably fall. Did I get that correct?
Correct.
Okay.
However, supply and demand is core strategy. We will move into more. I will show you. Obviously, you can't just buy and sell, because you want to know, where do you put your stop loss? Where do you enter the market? How much risk do you take? Where is this market going to move to? So what for now, as this is obviously our first lesson in charting, all I want you to learn is supply and demand. Remember, you don't want to be buying in supply. You don't want to be selling in demand, because you want to be doing the opposite. Iona, do you have a question?
Mandeep, everything is clear. Later on, I believe you will talk about support and resistances, which is actually supply and demand. That's when I'm going to be focused very, very well. For now, everything is clear. This is amazing and very helpful for me as well. So
okay.
Thank you very much. Everything is clear.
No problem. Okay, guys, so we're going to wrap up here. But for today, because I wanted to talk about supply and demand and its importance, remember, whatever you do, do not buy in supply and do not sell in demand. Let the market show you what it's going to do when it gets to supply or when it gets to demand. Now, I do have certain rules about supply and demand. For example, how many times the market been in there, and how many touches it's had, how much of the area is violated, etc., etc. But we will talk about that when we move into strategy and when I teach you my strategy, how you can trade it. For now, remember supply, which is resistance, demand, which is support. Supply will push the prices down, demand will push the prices up. Okay, Nimi, it's all yours.
Mandeep, thank you so much once again for all your time, efforts, and the knowledge that you impart us with. Very much looking forward to lesson 3. Do we have a little bit something to give our viewers of what we're going to talk about lesson 3, a little preview, or should we save that for next week?
No, it's okay. I can tell you exactly what we're going to talk about in lesson 3. Okay. Well, lesson 3, we are going to talk about psychology in trading, how to write a trade plan, a trade journal for success. Very, very, very important. We will talk a bit about charts. In lesson 4, we come back to charts again, but I want to mix and match. So what I want to do is talk about psychology next week. So that will be anything to do with your emotion when you're trading, and also talk about your trade plan, how to write a trade plan, what should go into your trade plan, and also a bit about trade journal, how to record your results, etc., etc. And above all, I'm going to teach you how not to bankrupt your trading account. Very, very important.
Okay, great. Thank you, Mandeep, once again. So wrapping it up here, guys. Thank you, Mandeep, for joining us. Yana, thank you so much for joining us as well. I thank you both for your time. Before we get off offline here, for those, whether you're a beginner or a professional or wherever you are in your trading career, very important coming up. I want to just throw this out there before we finish. We have some very important announcements coming out both today and tomorrow. We actually had the ADP non-farm later, and as well as we have the FOMC meeting at 2 p.m. GMT. And don't forget, guys, the most important here that we're waiting for is the non-farm payroll tomorrow, Friday, and that will be at 8:30 GMT time.
Okay, Nimi, can I just come in there for a second? Can I just
Sure.
We're running out of time, but guys, I just want to highlight this because some of the eToro clients might be searching under Mandeep Atwal. You won't find me under Mandeep Atwal. My name on my profile is Mani Atwal. That's MANNYATHWAL. Now you can view my profile and you can post any questions that you do have, and I will obviously answer those for you. Okay?
Yes, guys, before we wrap it up, Manny, I'm copying you on my practice account. Nicely done.
Thank you very much.
Nicely done.
Thank you.
Sure. Nimi?
Well, guys, once again, thank you so much. It was a pleasure. Once again, just remember, every week, Thursday, 12 o'clock GMT, we'll be hosting these. So look forward to seeing you guys next week, same time, same place.
Perfect. Okay, guys.
Care,
See you next week.
Bye-bye.
Bye-bye.
Bye. Bye.